Wall Street analysts are now saying, hey, next interest rate move could happen. There's a few points that I want to get at. The May CPI came in a little bit softer. That was a good sign, and that's a very bullish sign. Now, does Jerome Powell get into more of an aggressive hold? That is the question that will be answered tomorrow in the FOMC meeting. Mainly, this will come, I think, after the meeting itself, and we'll get it in the press conference, and it will give us a little bit of an insight on how this could turn out in terms of rate cuts. What we're seeing right now with world central banks, interest rate cuts 15 times in May, fastest month pace of the year. You look at this right here. This is a chart of the central banks cut at fastest pace in 2025. You can see the acceleration, 15 cuts. That's pretty big, when you look at what the rest of the world is trying to do, and not necessarily in a good position, I think, in many cases to do it. One thing to note on this chart is it goes back to some of the key points in history. December of 2008, we understand the financial crisis. This came out of the savings and loan debacle. A lot of that led up through a run in 2007. I know a lot of the triggers were there, much like what we're seeing even right now. And obviously, we know what happened in March of 2020. And then you look at September of last year, and then we rallied. And then, of course, that was, again, a cut in September of last year. And now, could we get another cut in the fall of this year and see a rally? If we do, the rally could either spark something much longer, or it could get you in a position where you might want to take a look at where your market position is long term. Meaning, do you start feathering out of the market? That's a real question I think a lot of people are trying to time, and it's very difficult to do so, but it could be the thing to watch for sure.